folks, Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory. Thought we would come to you today with a brief market update, kind of let you know what's going on out there. Market staging a little bit of a comeback rally today after selling off by about 1.6% on Friday after a weaker jobs report. I will come back to that in a few seconds. For a level, S&P 500 right at about 63.13, and that is up just over 7.5% year to date. So still a pretty good year, considering that we are just in the beginning of August for the S&P to be up almost 7.5%, or actually a little touch higher than 7.5%. Let's talk about Friday. So we got a jobs report. And that jobs report was maybe a little more benign than I think everybody made it out to be, maybe perhaps a slow news calendar. But unemployment rate at 4.2%, which is basically right where it has been for the past 4 or 5 months. You know, maybe a touch higher. Last month it was at 4.1. The 2 prior months it was at 4.2. You know, if you think about measurement error and you know anything about statistics, you'd say, that's about the same level, so not a big deal. What got a lot of attention, though, was the total number of jobs created, because it was 73,000 for the month of July. And then the 2 prior months, so May and June, were revised downward to almost zero. And so there's a lot of agita, you know, wailing and gnashing of teeth over those, you know, sort of very weak jobs numbers. Trump fired the person that's responsible for reporting the jobs numbers. Markets sold off by about 1.6%. Bonds actually rallied on the other side of it, which is a beautiful thing from a portfolio manager standpoint. So the Barclays Ag picked up about 50 basis points, or 0.5% sort of positive return on Friday. So that inverse correlation going on there, which we always like to see. I just want to point out to folks that the Fed is very, very focused on the unemployment number. And in fact, you know, Jerome Powell came out and basically said that earlier last week. That, you know, the Fed, as they think about the future path of interest rates, is really focused on where that unemployment number is. That's their key number to look at. And while the total jobs created is somewhat important, it is the side dish to the main dish, which is the unemployment number, which continues to sort of just rock on along at 4.2%, right in that sort of low 4s number. Obviously, the market not loving that jobs number, feeling like the economy might be a little bit weaker than we thought it was going to be. I think it's interesting because we are also right in the middle of earnings season, and earnings have been okay. Not terrible, not great. We've had about 330 companies in the S&P 500 report so far. Net income up about 8%, just a shade over 8% versus a 5% estimate, and revenue growth of almost 6% versus about a 4% estimate. So not blowing the doors off, but certainly not cratering by any stretch of the imagination. So that portion of the economy seems to be doing fairly well. The other thing that I would just say, you know, as we start to look out into the future and think about where the Fed might be and what they might want to do is, you know, inflation has continued to be relatively benign here these past couple of months, but we have yet to really see the impact of tariffs on inflation. And that data will really start to flow in here in the sort of July, August reports. If you look at the total amount of tariffs collected, you know, the tariffs really didn't start to bite until June. You know, we've collected almost $110 billion in tariff revenue year to date, but over $25 billion of that was in the month of June itself. And so, you know, those rates are ramping up. They're becoming more effective. And so we'll have to see how that flows through in terms of inflation and how the Fed thinks about all their decisions. So on the margin, I would say that Friday's reaction to the jobs market was a little bit overdone. Not as much change as you might like to think. And, you know, we just continue to be, as with the Fed, in a little bit of a wait and see attitude to say, you know, hey, low 4s for unemployment is just fine. And inflation continues to sort of moderate. We'll have to see where each one of those things goes. So with that, as always, if you have any questions, please feel free to reach out to myself or to your advisor. I hope you're having a great day, and I look forward to talking to you again soon.